Before we do commence proceedings, as is customary for those of you from Australia, you'll be familiar that we do tend to acknowledge traditional owners of the lands on which we're coming from in Australia. So given we're here in the Australian Pavilion, that seems very appropriate. So I do want to acknowledge traditional owners of the nations of the various lands that make up Australia, acknowledge their long and enduring and continuing connection to country, and pay my respects to elders past and present. We've got an esteemed panel, a small but esteemed panel here today. Tim Stock from New South Wales and Martin Hazy from South Australia. Both are going to talk about what's happening in their jurisdictions and how subnational governments can and are leading the way in respect to the green hydrogen revolution. But before we dive into that, I want to say a little bit about the forum under which this is auspiced, the Net Zero Futures Policy Forum. It is a grouping of subnational governments, including all Australian states and territories, but also including Wales and Scotland. We've got the sign out for more members as well, but it really is, and it's an under two coalition initiative. The premise of the coalition is really, of the policy forum really, is to recognise that all of us are on the same journey, we're all heading towards the same targets, and we all face the same challenges. So none of us is really starting from scratch, and there's so much to learn from each other by engaging in positive and constructive dialogue and learning from lessons, particularly around implementation. It's less about the what, we can read what other jurisdictions are doing. It's really at that implementation level and sharing some of the successes, the failures, what worked, what didn't work at that sort of policy level. The forum coalesces around a couple of issues. We're trying not to spread ourselves too thin, and we've got a couple of task forces which members can opt in to participate in. One of those task forces, the Nature-Based Solutions Task Force, had a launch yesterday, launched its compendium of some of the policy actions, and we had a panel session yesterday. This is the second of those task forces which all members were very interested in around green hydrogen, and you're going to see the product of some of that work today. So without further ado, I'll hand over to our panellists, perhaps starting with you, Tim, if you can do a short introduction, and I understand you've got a video packing as well.
Great, thank you, Mark. And yeah, before I just have a little, I suppose, a video to set the tone of why New South Wales and what we're trying to do and how we're trying to capture this market. But really pleased to be here today. So I'm Tim Stock. I'm the Director of Hydrogen and Clean Energy and sit within the Office of Energy and Climate Change in our Treasury Department in the state of New South Wales. And so I'm really happy to be here and be able to present what New South Wales is doing in the hydrogen space, and more broadly how integral and important that is for both New South Wales and Australia more broadly, being able to capitalise on our renewable energy capacity to be a hydrogen superpower. So without further ado, I'll just play a short video and then I'll be able to go into a bit more detail later.
Welcome to New South Wales, Australia, the land of innovation, where cutting-edge technology meets breathtaking landscapes. Home to abundant natural resources and Australia's largest skilled workforce, New South Wales stands at the forefront of the global hydrogen revolution by combining unparalleled resources with world-leading policy and incentives. Hydrogen will extend the reach of our abundant renewable resources to decarbonise hard-to-abate sectors. More than this, a commercial hydrogen industry could generate $80 billion of investment by 2050 and see up to 10,000 more jobs across New South Wales' hydrogen supply chain. New South Wales is well placed to capture this opportunity with the existing infrastructure and the renewable and people resources to achieve large-scale green hydrogen production.
New South Wales is the premier investment destination. We have abundant renewable energy resources, we have existing ammonia production and export capabilities, and we have Australia's largest integrated steelworks. On top of that, we have 3 of the country's major interstate highways. We're also the most populated and fastest growing state, providing vast job creation and skills development opportunities. Investors will only be able to find all of these advantages in one place, and that is New South Wales.
I think hydrogen is going to be a key strategy for New South Wales. And I think New South Wales can create itself as an energy superpower.
Building upon the state's competitive advantages, the New South Wales government has a raft of nation-leading policies and incentives for green hydrogen. Under the New South Wales Hydrogen Strategy, there are 60 actions and $3 billion worth of incentives to reduce the cost of green hydrogen by $4 per kilogram. The government is committed to reducing the cost of hydrogen production to less than $2.80 per kilogram by 2030.
Obviously New South Wales as a government's heavily invested, and we know that a third of output in Australia comes from the state of New South Wales. So that obviously creates a very thriving centre for doing business.
Our vision is clear: to make New South Wales a hydrogen powerhouse. We're actively working with industry leaders to create an enabling environment offering incentives for research, development and commercialisation of hydrogen technologies. We see great opportunities for harnessing future growth. With the largest economy in the country, a nation-leading $3 billion hydrogen strategy and the best workforce and investment conditions to support large-scale projects, New South Wales is set to become a green hydrogen superpower.
The state's universities and research institutions are hubs of innovation, driving advancements in hydrogen technology. Pioneering research is unlocking breakthroughs and efficiencies in hydrogen production, storage, transport and industrial uses. The research in this state boosts our competitiveness and provides locally based skills and expertise. New South Wales is embracing these opportunities to reduce emissions and work toward reliable, clean energy for local communities, for industry and for our trading partners. Join us as we journey towards a brighter, hydrogen-powered tomorrow in the heart of New South Wales, Australia.
So thank you, Mark, and it's always a bit awkward watching yourself, so apologies for that. So generally, I think as we go through the forum, I'll explain a little bit more about what those incentives and policy settings are and how they, are, as a sub-national government, how we're really trying to push the envelope of what kind of incentives are available to a state jurisdiction and how we can leverage that to drive hydrogen investment. But I'll probably pause there and let Martin introduce.
Thank you, Tim and Mark. Thank you, everybody. Welcome. I'm going to start just by underscoring the importance of the Net Zero Futures Policy Forum. This was driven home to me very clearly this morning when at 8 o'clock this morning I spoke at a sub-national forum which was represented by a number of countries around the world. At the end of that forum, a lot of the jurisdictions were saying amongst themselves and to me, where do we find this out? Where do we learn these policy settings? Because of course in the sustainability space, you've got jurisdictions doing different things differently, but that learnings between each other is absolutely critical. So it's a big shout out. This policy forum is the answer to that in so many ways, because it's all about sharing those learnings. It's all about collaboration. Although I must say, Tim, that New South Wales is like the big brother and South Australia is like the highly innovative cousin. Would that be a fair analogy? Especially when it comes to hydrogen. So my name is Martin Haese. I'm a former Lord Mayor of the City of Adelaide in South Australia. I'm chair of the Premier's Climate Change Council, which is an advisory body to State Cabinet in South Australia about climate change adaptation and climate change mitigation. And I'm also the Special Envoy to Singapore and Southeast Asia, which is a trade and investment role, which is inbound investment and outbound trade. So I do a lot of work with the state government wearing numerous hats, but it's wonderful to be here today. So thank you, Mark.
Thank you, Martin, and not to get in the middle of a family squabble here between big brother and little cousin, but we'll see what we can do. Look, thank you for those introductions. It strikes me that regardless of where people are on their green hydrogen journey, we're still very much in the scheme of things at the beginning point, piloting things, trialling things, and we remain quite a way on that journey to a true hydrogen economy Can you each speak briefly about what the main supporting factors and barriers are to scaling up hydrogen production in your jurisdictions?
Okay, thank you, Mark. So I think there are a number of headwinds. I think in the hydrogen space, Australia has, I think we have 40% of the globe's announced hydrogen production projects, but in that we have a nominal amount of those that have reached FID or financial investment decision to actually get built and be done. So there is a lot of work about being able to make sure which of these projects are real and how do we support the real projects and be specific enough to get be able to start on this journey. So I think there's a number of headwinds in getting hydrogen projects up off the ground. I think what's gone on globally in the last 2 years in the political and the war in Ukraine and the supply constraints of COVID and all of those things that are driving up inflationary pressures on projects, and energy pricing is going up, and certainly domestically in Australia and in New South Wales. And so that is, any increase in energy prices an impact on hydrogen projects, and so that's a headwind that we're facing. I think another headwind, as well as the change in global ammonia price, has been somewhat of a challenge as well. But with those, so there's all these challenges, but there's also a lot of benefits. We're undertaking in New South Wales an industrial decarbonisation planning process, and it's been very clear from the evidence base that we have that our domestic and industrial base needs a green molecule from hydrogen in order to be able to survive and thrive in the future. So yes, there are all these challenges, but we absolutely have the underpinning demand in New South Wales to help our industry be able to survive this change in transition. So it's kind of like we're stuck in this place at the moment where it is very costly to do these projects, but also they are the pathway of least regret because there's a limited alternatives to that pathway. And so, as an analogy, you could say that the hydrogen industry is where the renewable energy industry was 20 years ago, and we had what's called in Australia a renewable energy target that was put in place in order to force to be able to create incentives and have mandates to have a minimum amount of renewable energy generation in Australia. And yet we're 20 years since that policy was first developed, and we're still only at, well, different for South Australia because they're leading the way in renewable energy generation, but for most of our other states we're still around 17 to 25% of renewable energy penetration. So you can see how long it takes for these market interventions to work, and so we feel that there is a lot of opportunity. So I think I'll pause there, but there's lots of stuff New South Wales government's doing, and I might touch on that a bit later.
So South Australia's hydrogen story is actually a direct result of South Australia's renewable energy success. So to paint that picture for you, 12 to 14 years ago, there was 1% renewable energy in South Australia's grid. We were a very coal and gas dependent grid. In 2023, South Australia has now averaged annualised at 72% renewable energy. And by 2030, we will be 100% renewable energy and will become a net exporter of renewable energy. So that's actually created the conditions. Now, that happened through an abundance of wind and solar infrastructure. There's been literally billions upon billions of dollars of investment. There are 33 renewable energy projects operational at scale in South Australia, which have created that result of 72% renewable energy in the grid on any given day. 180 days of the year, we are 100% renewable energy in our grid. Now, that is an incredible result globally, but that actually created a problem. In as far as we have an enormous amount, 180 days of the year, what we'd call unspent renewable energy exiting our grid, going into the ether, so to speak. So what do we do with it? How do we turn a source of renewable energy or an abundance of renewable energy production into a form of renewable energy we can store? Entree green hydrogen. Now, to catalyse the project, and full credit to Premier Peter Malinauskas of the Government of South Australia. It's very good leadership. The government knows that we're a first mover. The government knows that we are an early adopter of green hydrogen technology. So the government is funding the project, or South Australia is funding a 250 watt green hydrogen electrolyser with 200 megawatts of storage. So, and this is attracting extraordinary interest. But it's actually a shared story with New South Wales, because our goal is to, in the first instance at least, to decarbonise industry. New South Wales has got the largest steel mill in Australia, and South Australia has the other one. And that's a very large steel mill in Australia too, which is owned by GFG, by Sanjeev Gupta. And that's at Whyalla on the west coast of South Australia. And that facility is going to change over to produce green steel by basically taking a production input from the green hydrogen electrolyser, which will be operational by circa 2026. So we're moving at speed. We have passed legislation which actually enables the creation. We have picked the contracting group, the consortia who are delivering the build, but it will be a state-owned asset and it will be a state-operated asset built by private industry. And it's creating interest nationally and globally. And it's to decarbonise industry. And whether that, and I think Tim would be able to elaborate on this too, whether that down the track actually materialises into export opportunities for South Australia and New South Wales, or whether that's ammonia, or that's liquid form or gas form, we don't know yet, because we are at the bleeding edge of kind of leadership when it comes to green hydrogen technologies. We're learning every single day. But it all happened because the conditions were right, and we have so much green energy in our grid that it actually then became the essential energy input for creating another form of renewable energy, being green hydrogen. And that's very much the South Australian story.
Thank you. Really interesting and slightly different approaches and drivers being articulated in both jurisdictions, and I think starts to draw out some of the strengths of the Federation in that opportunity to really learn from each other. You both already touched on this a little, but I wonder if you can just go into more detail into your own individual strategies, and in particular, you know, there's obviously the need for government assistance and support in the form of subsidies and other sorts of mechanisms, but that idea of collaboration, there's so many different actors in the hydrogen economy that need to come together. How you foster that collaboration between the different stakeholders in the system?
So, yeah, thanks, Mark. I think, so there's two parts to that question I'll address. So the first one about the different types of approaches to market development that we have, and I must applaud South Australia for being able to have the capacity to be able to invest in a very large hydrogen plant that will drive the market and be a benefit to every project in Australia. But the way that we've approached it is trying to do more market-based incentives. So actually spread the let the market do the leading to some extent. And the way we're doing that is through two innovative incentives. So the first is what we're calling the network exemptions. So they're to the value of about $1.5 billion. And what we're doing is being able to say to any hydrogen producer, if you can connect your electrolyser to parts of our electricity network that doesn't require that network to be augmented or invested in to enable that capacity to flow into the network, then you are eligible for a 90% exemption of your electricity charges. So I know there was a lot of information there, so what that basically means is that to run an electrolyser, you need a lot of electricity. And in Australia, generally, your electricity bill, half of it's made up from your network charges, which is your charges to connect to the grid. So the idea is if we're providing a 90% exemption to that charge, which is a very significant cost and a very big driver from an OPEX perspective on getting a very low cost of green hydrogen production. So we're being agnostic to that. Of course, there's eligibility, but the idea is that it's available to anyone that can prove certain conditions. The next incentive that is market-based as well is we've got what's called a renewable fuels scheme, but this is essentially, we have Australia's only and we think globally, hydrogen target that has a liability from entities. So it's essentially a white certificate scheme, and we have legislated that there must be a minimum of 8 million gigajoules of hydrogen produced by 2030. Sorry, not produced. There must be the equivalent certificates bought of 8 million gigajoules worth of green hydrogen by 2030. So that's already legislated, and the liable parties are our gas retailers, and the idea is that creates an artificial demand that's available to anyone who can produce green hydrogen. Again, there's certain eligibility and rules about how to determine that is the case, but that's another incentive that is market-based. We believe that's in the region of $1 to $1.5 billion as well. So those are just some of the kind of the structural incentives that New South Wales is really trying to catalyse and drive this market. Now, another incentive that we're doing that leads to the second part of the question about collaboration, and this is, and South Australia and our other jurisdictions are also trying to manage this. It's about that, the coalition of the willing and not being able to get multiple parties and multiple offtakes and multiple applications of hydrogen to work together to spread the risk and to spread the cost. And so we're doing that with our Hydrogen Hubs program, which is we've invested and awarded around $110 million over the last 12 months to 3 hydrogen hub proponents, and the idea is that they've got to show multiple offtakes and ability to bring parties together and collaborate to show to be able to prove that different end users and different parts of the hydrogen supply chain can come together and build a project. So I think that's probably enough for me. Yeah.
South Australia has tackled that issue in many ways by creating a new vision for what we call the re-industrialisation of South Australia. So some in the room might be aware that kind of historically South Australia had a very strong manufacturing base, and over the decades we lost it. Now, I know a lot of jurisdictions have had their manufacturing bases move or offshore over the decades, but South Australia and Premier Malinauskas have a very strong vision for what we call the re-industrialisation of South Australia in the low emissions economy. So we want to be a global leader in terms of manufacturing and agriculture and mining in the low emissions future, which we all know is not coming, it's upon us now. And that's why this green hydrogen electrolyser fits into that. As Tim said quite rightly, is that electrolysers are all about offtake agreements. That's what catalyses the economic value of any scale of a hydrogen project. We, of course, are in advanced negotiations with GFG with regards to offtake agreement, with regards to the production of green steel, but this goes much further. We've identified a pipeline of $20 billion worth of industrial projects, and to really almost re-industrialise the west coast of South Australia and turn it into a very competitive, very sustainable hub for manufacturing with an export bias. Now, that's a very different future for South Australia. You need a lot of social capital, you need a lot of political capital to do that, because you've got to build things like desalination plants and other infrastructure in order to produce hydrogen, green hydrogen, at a scale like that. It takes a lot of communication, it takes a lot of education, and yes, it takes incentives, yes, it takes legislation. So we've recently just legislated the Hydrogen Act for South Australia, and that's a really seminal milestone for our state to overcome. So, and we're moving at speed. So we want this facility to be open, productive and functioning by 2026, which in the larger scheme of things is not far away. But what it is doing is, because we've gone through the era of the consumer incentives, this is for us about industry, because it's at scale, is that the fact that the state is leading the project has absolutely garnered the interest of the funds industry, who are looking to South Australia and saying, What does that $20 billion worth of projects look like? What do these offtake agreements look like? How much hydrogen can you really produce? When will you get to a position where you can export hydrogen and we can potentially buy it from you? And in what form will it be? Now, we don't have the answers to all of those questions, but we have a Premier who has that vision. And I think that's where it starts. Because if you wait for perfection, you'll miss the opportunity. There are many jurisdictions having these conversations around the world, but in many ways Australia is leading this in terms of hydrogen production. In order to lead, you can't wait for perfection. You have to create the conditions, you've got to create the legislation, you've got to create the demand, but you have to act. And we're learning as we're walking, as we're running. There's no doubt about it. But it's a really, really exciting project. And to re-industrialise South Australia in the low emissions economy and the green economy is an incredible opportunity for not only South Australia, but also for Australia.
I really like that theme there about learning by doing and just getting on with it. It's a theme that I think underpins just about everything that we'll be talking about at this COP, that need for action, that need to just get on with it and, you know, fix things up as they go along, learn from our mistakes and just keep moving. You both already touched on this, you know, in terms of the cost gaps and trying to move along that technology curve. Hopefully the transition to a commercially viable and effective green hydrogen price is a lot quicker than we've seen in renewable energy. But can you guys speak in a bit more detail, I guess, about what are some of those main factors driving the cost for green hydrogen in your jurisdictions? And I guess a little bit more on the sorts of policies that you think are going to be effective in driving that price down, particularly in the context now. I think this time last year, we're all just digesting the implications of the Inflation Reduction Act and the various subsidies in there and what that will do both to the technology curve, but also to the resources globally to support the scale up of these industries. Wondering now, a year down the track, how you're thinking about those sorts of issues.
So I think there's a couple of parts that I think there's got to be things that when we look at these problems and we'll look at the ways that we're going to get these hydrogen projects up the ground, there's only a certain amount of stuff you have control over, and some of the things about global supply constraints and things are going to be very hard for anything that happens within New South Wales or probably more broadly in Australia is going to really impact global supply chains to that extent. But what areas that we can impact in being able to drive down the efficiencies are things like permitting and planning, the local workforce, the skills development, all of those other parts that in a whole project can lead to significant cost reductions. And I think it goes to that point about being able to. I'm very glad that there's projects getting up in Australia and in South Australia and others that are getting closer, because we all need to do these steps in Australia to make sure that our workforces more broadly across Australia are skilled and capable to be able to deliver the energy transition that we have. So specific in New South Wales, we've just committed under our new government a $25 million Hydrogen Centre of Excellence, which is about trying to make sure that we have the skills available and that are capable for this hydrogen transition. Because we're very well aware we have a large carbon exposed workforce in New South Wales, and so we need to ensure that there is a viable opportunities, and we're planning already those skills gaps and the skills requirements and mapping them to those existing workforces to make sure that there are appropriate pathways and we can bring those workforces on the journey. And we're going to need them, right? If we're going to build a green hydrogen exporting economy, we're going to need huge amounts of electricians and all types of skilled workforces that we already have slightly in the oil and gas industries, and we need to be able to make sure that they're fit and ready. So I think that will enable us to cover some of these other cost gap headwinds that we're facing, as well as, of course, the incentives that I mentioned earlier. But I think we have recently looking at expanding the for initial projects to help kickstart those initial projects, expanding our renewable or doubling the incentive of our renewable fuel scheme to be able to support those first projects and those early adopters, because they're the ones that have the biggest costs. And after we do, if we walk, we need to walk before we run, but once we've done those first few projects, the absolute cost reductions that learn by doing will be significant in New South Wales, and we'll also benefit by having other projects that do the learn by doing as we work really collegiately across our states and within our national framework. So,
Tim has talked about what I think is a vitally important component, and it is skills deficits, skills shortages, skills developments. We can talk about a $20 billion pipeline of projects for South Australia, and if I recall from the video, an $80 billion pipeline of projects for New South Wales. But these things don't happen unless there are skilled professionals who can deliver them, and a lot of them. So we've recognised that. We don't have all of the answers at this point in 2023 to that problem. We're working with the technical colleges, we're working with the Vice-Chancellors of the universities in South Australia. We've got 2 major universities in South Australia which will merge over the next few years to create Australia's largest university. And we're talking with them now about curriculum design to ensure that we're addressing these skills gaps, because this only escalates in terms of demand. It's absolutely critical. We're also talking about infrastructure and housing. And I'll share the likes of like the City of Whyalla, which is a city on the west coast of South Australia, which at Port Bonython is where many or much of this infrastructure is going to be housed, is that in terms of that's where the hydrogen electrolyser will be in South Australia. But Whyalla needs housing. Now, the local government in Whyalla is playing a very good, strong leadership role in terms of articulating demand, projected demand, for local housing over the next 5-10 years in that jurisdiction. They're the types of conversations and strategies that we actually need to be putting in now as we concurrently build the electrolyser. We need to build all the infrastructure which surrounds it to make sure that it is a success. Because if we don't, that is in fact our critical risk. Demand can be construed as a critical risk, but if you identify the right partners, either through green steel production, larger industrial players, they're going to come to the table because they need to decarbonise in terms of their energy input, because they're selling and export material to global markets. It's got to underwrite their business sustainability, their commercial sustainability, as they export into other markets. You know, we all know what the future is going to look like. You're going to have to prove the footprint of your goods into foreign markets in order to be competitive in those markets. So this is a complex, I mean, we would all know, everybody in this room knows, there's nothing more complex than energy. It's an extraordinarily complex market because there are so many players. There's generation, distribution and retail, but then there are various sources of energy that sit behind that. We've got to be able to address each of these components of the puzzle, often concurrently, in order to de-risk the project. And legislation and incentives and demand-side economics, distribution, infrastructure, policy, skills development, you can't do them in isolation. You've got to all do them simultaneously in order to deliver a successful outcome for your jurisdiction. It's highly complex. So it takes a lot of resources, it takes a lot of skilled people, it takes a lot of skilled policy people, but a lot of skilled commercial people at the table in order to derive the outcome. So collaboration, just like what we're doing today, is incredibly important because otherwise we could falter. So collaborating with New South Wales and New South Wales collaborating with South Australia on a similar journey but taking a different approach is business critical towards us succeeding.
That's a perfect segue to my next question, Martin, which is really about collaboration, but not just across jurisdictions within Australia, but globally. You spoke a bit about the need for offtake agreements, and we know that global demand for hydrogen is massive, it's growing, it's going to be a really important part of the hydrogen economy going forward, as well as other jurisdictions around the world are on this journey. They're doing the same things. How are you both thinking about those international partnerships and connections to both leverage those learnings but also grow your export markets?
Well, for New South Wales, we have a long legacy of exporting energy in the form of coal. Currently, we have the I believe the world's largest coal exporting port out of Port of Newcastle, and they are servicing the energy needs of our North Asian market partners. And so we're very cognizant of the role that New South Wales plays in that legacy of being able to provide energy security to our key trading partners, and we want to continue to have that legacy as we helping these trading partners transition to a net zero future, as long with ourselves. So we feel that partnership is underpinned by a number of things. It's being able to prove that you have the capacity to deliver on those goals, and so I think it's critically important that we partner and enable some of that two-way trading flow with our trading partners on the technology up the supply chain that can help us underpin this hydrogen economy. So we are lucky that our trading partners in North Asia also tend to have a very strong legacy in hydrogen production and hydrogen use. So being able to leverage some of those learnings on a two-way partnership will be critically important. So we kind of take a long view on this and being able to make sure that there is a lot of hype around hydrogen, and it's being able to be very specific and very measured, but also and being pragmatic about what we can do and how we can do it. And I think that builds trust in the long run from our perspective.
Mark, I echo Tim's sentiment. We in the early days of the Hydrogen Jobs Plan, that's the name of the hydrogen strategy in South Australia. It's called the Hydrogen Jobs Plan. But we were thinking initially that we may have a stronger bias toward the export of hydrogen in some form. But what we've all learnt, and I'm sure New South Wales is on the same trajectory, is that there's less risk in commencing with a domestic strategy. So for the reindustrialisation strategy in a low emissions environment. So basically hydrogen to industry. The distribution and transport networks and port infrastructure and demand and otherwise from foreign jurisdictions, this will all materialise in time. So we're learning through a localisation strategy when it comes to the implementation of hydrogen. But I must say what I am seeing, and this is incredibly tangible, is when I was the Lord Mayor of Adelaide, I used to travel to Southeast Asia relatively frequently, often Singapore, and work with funds, as in institutional funds, from an investment attraction perspective of bringing investment into Adelaide. And this was 2014 to 2018 era. And the conversations then were almost exclusively about real estate. How do we invest into South Australian real estate? What do those opportunities look like? Earlier this year, the state government appointed me into a special envoy role for South Australia into Singapore and Southeast Asia. So it's an ASEAN role. It's not a diplomatic role. It's a commercial role. It's a role to attract investment into South Australia and to help South Australian companies export into that part of the world. So between those two roles, the quantum shift is actually material, and I think it's all because of ESG. ESG has changed boardrooms irrevocably. Is that investment managers, whether they are institutional or they're sovereign, because we're talking to both, now have a requirement from their boards in order to decarbonise their investment portfolios. And that is material. So this is driving their demand to start looking at New South Wales' $80 billion worth of projects and South Australia's $20 billion worth of projects, because they have a need. They're the ones creating the demand. They want to invest into renewable energy projects, hydrogen projects, particularly green hydrogen. Green is the best colour when it comes to hydrogen, hands down. And it's where the demand is. And so there's a lot of interest. I'll be hosting an investment symposium in Adelaide in March 2024. Tim, please join us, because we're going to be bringing these fund managers into South Australia to basically learn about the policy settings, the legislation, the offtake agreements, the reindustrialisation of South Australia, these projects are ostensibly going to be funded by private enterprise. It's the state building the electrolyser, and it's going to be private enterprise catalysing the demand for reindustrialisation and hopefully ultimately the export of either green hydrogen in a liquid form, in a gas form, or in an ammonia form. We don't know yet. This is what we're working on. So there's almost several tranches of work that need to be done in order to realise this vision. But I think we're all unanimous in saying you have to start. If you theorise about green hydrogen forever, you'll miss it. And so I'm kind of very appreciative of the leadership of the Premier of South Australia, who has been presenting only 7 weeks ago to sovereign wealth funds in Southeast Asia on this very, very topic. And the level of education amongst the funds and their CEOs is a level which surprised me. There's a lot of DD being done by the fund managers on low emissions projects, low emissions industry, green hydrogen. There's interest. So I'd encourage everyone to think this is emblematic of the future. Green hydrogen's not the only renewable energy play, but it's the one that stores wind and solar in the most effective means. Batteries can store, but they can't store at grid scale in terms of, like, a battery can't hold up your state or your province or your country, you know, for an indefinite period. But it's all in the mix. And this is why green hydrogen is so critically important and such a big commercial opportunity.
Thank you. Got one more question before we throw open the to the floor for further questions, and it's really about technology and that technology curve. And I'll ask it in two parts. What do you see as the most promising technologies and innovations that can enhance the efficiency, safety, and sustainability of green hydrogen? And then two, and I guess this speaks to the role of government that you guys have been speaking about. How do you support that R&D demonstration and deployment of green hydrogen technologies in your own jurisdictions?
I think for the first part, we're seeing in the University of Wollongong, we have as an example of the kind of innovation that can come through if you connect to your research institutions. We have a technology that's called HySATA that has come out of the University of Wollongong, which increases the efficiency of PEM electrolyser, I think it's PEM, by an order of magnitude to be the world's most efficient electrolyser. And they're currently going through, and the New South Wales government has provided funding through each stage of their commercial development. So first it was supporting the R&D process and having the test lab designed in a way which could provide the first phase of the scale of like a couple of kilowatts in order to show that it was doing, and then now funding further funding to go to a production line and funding again to expand out. So it's about having, the New South Wales government has what we call a Clean Technology Innovation Fund, which is to the tune of around $35 million, and it's exactly doing as you alluded to. It's partnering with these new technologies as they go through that commercialisation journey is so critically important, both for being able to make sure they have the capacity to build up appropriately and to be able to adopt the latest manufacturing techniques to be able to drive down the eventual production costs of these technologies. And I think that is such a critical and really key focus of the government to be able to support those innovations. So we have, that's just one example in terms of where we think the technology is emerging. We've also got another technology that's called Rux Energy, and that's looking at how you can get how you can increase the storage capabilities of hydrogen and putting in materials into storage tanks that expand the amount of hydrogen you can store in those vessels, and that's looking incredibly promising to be able to increase the capacity of hydrogen storage, which will be very beneficial and drive down costs. So there's a number of examples of technology. I'll just take a moment to say we are also working on trying to get hydrogen FCEV heavy vehicles in Australia. We're unique and we have B doubles and we have a lot of heavy transport that has a limited alternative pathways for decarbonisation in that very heavy transport sector. And so we're trying to unlock that technology by working with the Victorian government on a Hume Hydrogen Highway where we're combining our funds to be able to have a pool of funds that connects Sydney to Melbourne on the world on Australia's largest traffic route and put refuelling infrastructure down, and importantly seed the funding for the hydrogen fuel cell electric vehicles and at heavy vehicle stage to get that into Australia. So that's like two different levels, because that technology is somewhat getting commercially ready, but whether they're looking at Australia as a market, it's being able to signal that intent, and then you have more the commercial readiness and the R&D investment that we're doing. So, thanks.
2 years ago, I didn't know what climate tech actually meant. And now, 2 years later, people are talking about climate tech as a sector. And this is just emblematic of how quickly this is growing. The level of innovation, mostly coming out of either the startup or the entrepreneur communities. This is not all about corporates. Corporates are doing amazing things, but so are the startups and so are the innovators and so are the SMEs. I've been invited over the last 12 months to 3 events by a gentleman called Aaron Hausler in South Australia, who is really kind of the champion of the climate tech sector. And after this session, I'm speaking at a climate tech event. The innovation's extraordinary. And it's people who are coming up with innovative solutions to solve problems in the low emissions economy around agriculture, around transport, around distribution, around carbon accounting, around mining, around energy itself. And they're designing a lot of the applications which help solve the problems, and they're often working with governments and often working with corporates in order to deliver them. And it's almost limitless because it's an evolving market. And what South Australia has done to kind of help foster this is that we work very closely with the Green Hydrogen Cooperative Research Centre, which is the CRCs, and there are CRCs around the nation. We're actually helping with funding towards the CRCs to make sure that they can work with the climate tech sector so the climate tech sector can deliver the solutions. CRCs also do a lot of research. Your collaborations with your universities are absolutely critical, and I spoke to that briefly before. But the R&D capacity, the horsepower that universities got to bring to the table in terms of R&D, and then working with climate tech sector, working with corporate Australia, working with governments at all 3 levels, again, is really critical. We often bandy the word collaboration around, but the hydrogen economy won't work without it. It's absolutely critical that we become highly sophisticated at collaboration in order to deliver this opportunity for our nation. It's incredibly important. And no more so than kind of supporting the innovators who are designing and implementing the niche solutions that the corporates need, that government needs, and providing the conditions so they can do it. And in some instances, providing the incentives and the funding so they can go ahead and do it. Not all of them will succeed, some will fail, but that's what happens in the startup community. They know the rules. But those that innovate will actually become significant enterprises. Those that succeed through their innovation can become significant enterprises in their own right and really change things for the better. Also, the Department for Energy and Mining in South Australia, through the Office for Hydrogen Power, which South Australia set up its own unit called the Office for Hydrogen Power South Australia, led by Sam Crafter and Richard Day. Now that unit is all about just focusing on the hydrogen economy, the technical side of it and the commercial opportunities around it. Setting up these special units within your government jurisdictions, within your states or your countries is really, really critical. And bringing in skilled people who then know how to collaborate, not only within their silo, but you've got to work laterally with other government departments, with other actors. It's really, really important. These are kind of the ingredients for success in the hydrogen economy. Collaboration is absolutely business critical for success, and lateral collaboration is just as important as vertical integration.
Thank you, and thank you both. We've covered a fair bit of ground over the last 50 minutes, and I'm sure that's prompted a few questions. So happy to open to the floor now for any questions off the panel. Have we got a mic roving?
Thank you very much for a very interesting discussion. And I think, Martin, my question's for you. You mentioned about, it sounded like you were explaining a situation where you were using curtailment of renewable energy to power the hydrogen. What additionality of renewable energy is South Australia adding? You mentioned a 22 billion in investment in hydrogen, but I mean, you don't have 100% penetration, you're 180 days penetration, but what about the other 180 days?
Yep. So that's a good question. Thank you very much. South Australia currently sits at that kind of 72% renewable energy in the grid. That's principally coming from from wind first and secondary solar. We've got battery storage tech and a few others which kind of support it, but the key driver is actually wind. There's 5,500 kilometres of coastline in South Australia, and in some areas we've got 24-hour wind. So hence it's proliferated over the years. The backup in the grid at the moment is natural gas. And now, the future is that the hydrogen electrolyser effectively will take us a quantum leap towards 100% renewable energy in our grid. Solar continues to grow. Wind continues to grow. That $20 billion pipeline of commercial projects contains all three: wind, solar, and hydrogen-related projects. To have a stable and resilient grid, you need to diversify your input sources of energy. We learnt that more than any jurisdiction. Some may recall, of course, in 2017, South Australia had a statewide blackout. And to some degree, we're kind of vilified for that. But in the passages of time, we've actually been vindicated because we've strengthened our grid as a result of that. We had cyclonic conditions, which is incredibly rare for South Australia, but we had transmission towers go flat to the ground, and we lost our grid connection with New South Wales. And our state went down. Now, that's global news. So we've done a lot of work, and Elon Musk put in, at that point in time, the world's largest battery, and there's now been subsequent more batteries. But the hydrogen story is part of making the grid more resilient too, so that you've got this diversification of power inputs. We have forecast, and we've actually been conservative in that 2030 target, is that we'll be 100% renewable energy through those three production inputs, or those sources of renewable energy. And then we expect after 2030 to become a net exporter of renewable energy. There's a $1.3 to $1.5 billion interconnector going to be built, new one between South Australia and New South Wales, and we hope to be selling lots of energy to Tim through the national grid. That's our goal. And that'll be clean energy, that'll be renewable energy. And some of that will come as a result of our hydrogen electrolyser, but it will be wind and solar which will be the major ingredients into us distributing more clean energy into the national grid.
Alex Matthews here from the Commonwealth Bank. Thanks so much for the discussion, really stimulating. You've both talked about sort of the startup world, and Martin, you talked about institutional investors. What do you need from commercial banks and providers of debt?
I think we can both have a go at this. Alex, thanks for the question. CommBank is doing an outstandingly good job in terms of leading the green economy and doing a great job on carbon accounting. So I work with your team in South Australia quite closely on these matters, and Justin Sharp from Sydney and so forth. So full kudos to the bank. The bank is leading, I think, the ESG agenda for many of the Australian-based banks, and which means you're going to have a higher propensity to be funding ESG-related projects. So what do we need from a government's perspective? We need for you to get behind the corporations and the institutions which are going to be reindustrialising South Australia in a low-carbon economy. And for you to run that all through your DD processes but to see that ostensibly as a growth opportunity for the bank in the future. There are commercial returns in this space as much as there are environmental necessities in this space. And I think that's the really exciting part about it, is that we've moved well past economy versus environment. You can't do business from several years ago forward without equally considering the environment with the economy. They've now just become the same conversation in so many ways. So what do we need you to do? We need you to be supportive, brave, lean forward into funding major projects in the low carbon economy, and we believe the bank will ultimately be a great beneficiary of that.
And I think I really echo those points, but a couple of things I would also add is consider for us like how when organisations are coming for that debt, and including government incentives and subsidies, how you take that into your DD and decision making, and if there's any issues about how you are considering them, the viability and the risk associated and the risk premium associated with that, to like engage with government to discuss that. So because we're very cognizant that we're trying to create those incentives so they can be bankable to take to institutional investors to be able to get the funding. So that's for us is really a key component, and just echoing also lower interest rates for those green energy projects.
I agree. I might jump in there again if I can, Mark. So I had a meeting earlier today with the business card right in front of me, Managing Director of MUFG, Japan's largest bank. And I asked him the same question. And he said, we're shaping policy in the bank whereby we actually provide a concessional rate of interest to corporations who are building projects which sit exactly in line with our ESG and sustainability agenda for a balanced portfolio of lending. So there's an incentive there that bank is prepared to give in the future towards corporates who are doing these projects. And that's a really tangible outcome, and you can see that's going to drive demand very hard. So it was interesting. That conversation was literally 2 hours ago. So.
I think we've got time for one more question from that gentleman there. We got that mic just on this.
Thanks so much. A great discussion. Ian McGill from the University of New South Wales. And this is something both Tim and Martin have picked up on, but I'd just like to hear it a bit more, or explore it a little further. And it's the mismatch between projects wanting to get built and buyers wanting to buy. And Bloomberg's just done the most recent analysis on that, of how many projects out there actually have off-takers and so on. We can ask finance to be brave. Maybe they will, maybe they won't. But surely the really key thing here is around building the offtake. And you talked about some of the policy in New South Wales on that. Great start, pretty modest. Talked about green steel, commodity industry, super competitive. How do we get the demand side to be signing contracts which may well be out of the money in terms of conventional options right now? We can't just rely on the Europeans and CBAM, right? We've got to get into that policy space, and be very keen to get your perspectives on that.
Thank you, Ian. You're very right, because it's kind of almost the nub of the issue from a demand side. Is our Premier is quite articulate about this. He said, but Martin, that's why the South Australian government is going to build the electrolyser, simultaneously then go into negotiations with larger corporates towards offtake agreements. He said, we're de-risking the project to some degree, and I'm just first going to talk about, which party is going to finance the construct or the build of the electrolyser and operate it. He's very clear as to why the state must do it. When it comes to then kind of catalysing industry so that those offtake agreements come, I can share that as a result of the Premier being so bullish about a 250 watt green hydrogen electrolyser in South Australia, is that we've now got interest from disparate corporate actors who want to talk to South Australia about the potential production of synthetic fuels. And we're getting interest from a whole range of corporates, which I don't think we had even countenanced when the Premier basically said, we're going to build this and we're going to legislate to build this. And I don't have a perfect answer to your question, other than, and it might sound a bit glib in terms of build it and they will come, but I think there is a piece here around leadership and communication, and then having a very skilled team, is that the Premier is unequivocal about his goal to re-industrialise South Australia in a low emissions economy. And he's very good at communicating this to corporate players, nationally and globally, and does it a lot. And we now have delegations coming into South Australia saying, what does that look like? And they want to talk about price, they want to talk about all the mechanics of what a deal would look like. And I would imagine that we, in the not too distant future, will be having a discussion about the fact that a 250 megawatt hydrogen electrolyser beckons another one, because the offtake agreements and the demand for them will drive demand for more hydrogen production, particularly green. So I'm not answering your question perfectly, because in all honesty, I don't have the answer perfectly, because it's work in progress. But there is, I think, an argument, and I'm seeing a growing level of evidence around this and sophistication, that there is appetite amongst industry and there is opportunity amongst jurisdictions to just be very clear about what they're looking to achieve, put the policy and put the infrastructure in place to support it. And for example, we'll be building a significant, or another one, desalination plant in order to complement the growth of green hydrogen production because of the essential input of a lot of water. So there's other infrastructure investments that kind of also need to be surrounding, you know, it's not just housing and skills. So it's a significant kind of commercial play, but it's also a big opportunity. We think it could redefine the future of South Australia, like reposition the state in the global economy. And, you know, we look back 30, 40 years ago when we were a big kind of manufacturing powerhouse. We're just going to do it in an entirely different environment, in an entirely different way, with entirely different infrastructure. I hope that partially answers your question, Ian.
I think we might need to let Martin and the little cousin have the last word on that, because we are just a bit over time. But I do want to thank our panellists, Tim Stock and Martin Haese, for their insights. Thank you all for participating. I think if anyone's feeling a little bit jaded or cynical, as you can do at these COPs about the progress that's being made, green hydrogen is a fantastic space to come into and participate in and hear about the progress, because it is so revolutionary, it's so exciting, there's so much prospect there. So thank you both for sharing your insights.